Welcome to DebtCircle Key Roundups coming to you on May 4th, 2026. I am Vijendra.
And I am Leela.
Today, we're diving into some exciting developments shaping India's financial landscape.
That's right, Vijendra. We'll explore why rural India is increasingly choosing NBFC gold loans, favoring speed over paperwork for quick access to funds. We'll also discuss Federal Bank's strategic move to acquire the Stancy India credit card portfolio, signaling big shifts in the banking sector. And finally, we'll analyze the surge in India's NTC borrower base, which is driving credit growth while lenders maintain a selective approach. Plenty to unpack ahead.
Let's start with rural lending. Rural borrowers face delays with banks due to strict documentation and credit checks, but NBFCs like IIFL Finance offer gold loans with quick approvals, minimal paperwork, and transparent loan-to-value ratios, aligning better with rural income realities.
And that speed is crucial for farmers and traders who need immediate funds to meet agricultural cycles or business demands. NBFC gold loans reduce missed opportunities by providing faster access compared to traditional bank loans.
Plus, flexible repayment options like monthly interest or lump sum payments, zero foreclosure charges, and part payments help borrowers manage irregular incomes effectively, strengthening trust and affordability.
And with expanding NBFC branches in rural areas cutting travel time, financial inclusion is improving, with word-of-mouth endorsements reflecting growing confidence in these fast, simple, and transparent gold loan services.
Moving on, Federal Bank has signed an agreement to acquire a retail credit card portfolio from Standard Chartered Bank India, effective May 4th, 2026, involving a phased migration with replacement cards issued for a smooth transition.
This strategic move strengthens Federal Bank's retail lending and credit card business by adding an established customer base and improving their competitive position without any equity changes or related party concerns.
Importantly, Federal Bank holds no shareholding in Standard Chartered Bank India, so this is purely a portfolio acquisition with no impact on either bank's capital structure.
And the phased migration plan minimizes disruption for cardholders, which is crucial for customer retention and maintaining trust during such transitions.
Now, India's new-to-credit borrower base has grown to 4.4 crore by February 2026, with a compound annual growth rate of 5.1% since February 2022.
That's significant. Although lending has become more cautious, with new-to-credit borrowers now representing 17.8% of loans, down from 23.5% earlier.
Non-banking financial companies manage over 60% of these accounts, while banks have reduced exposure and female participation has increased from 33% to 41%.
Encouragingly, 67% of new borrowers moved to low-risk credit within 1 year, showing strong repayment discipline and supporting financial stability.
1,000 crores from State Bank of India, increasing its already sizable debt levels. Turning to infrastructure, Power Grid Corporation of India secured an unsecured loan of Rs 4.
That's significant given its role in India's power sector growth, especially its target of 500 gigawatts of non-fossil fuel capacity by 2030. But rising debt amid modest projections could limit financial flexibility if conditions worsen.
With a debt-to-equity ratio between 1.19 and 1.37 and interest coverage at 3 times, the company's capacity to service debt remains stable but tightening.
And from a market perspective, the stock trades at a price-to-earnings ratio around 19 to 20, which is considered expensive compared to peers.
In commodities, gold futures on the multi-commodity exchange fell by 0.23%, pressured by a stronger US dollar and inflation worries linked to crude oil prices staying above $100 per barrel.
Those elevated crude prices, driven by ongoing US-Iran negotiations, are keeping inflation fears alive and impacting global commodity markets.
The Federal Reserve maintained interest rates between 3.5 and 3.75%, but highlighted inflation risks, with the personal consumption expenditures price index rising 0.7% in March.
Technically, gold has support near Rs 1,50,650 and resistance near Rs 1,52,200, with strategists suggesting booking profits near Rs 1,53,000.
Kochi Municipal Corporation is planning to issue municipal bonds in fiscal year 2026 to 2027, following SEBI approval to fund development projects.
These bonds will attract public investments supported by monitoring mechanisms and rating agencies, boosting investor confidence and enabling sustainable urban growth.
Meanwhile, the Indian rupee fell to a record low of 95.33 against the US dollar, while bond yields rose, reflecting geopolitical risks and rising oil prices.
Yes, Oil importing currencies are under pressure globally, and markets will closely track geopolitical developments as they influence yields and currency movements.
On the ratings front, Mai's Financial Services saw its credit rating reaffirmed at AA, while SK Minerals received an upgrade and Shree Cement maintained its highest short-term rating, reflecting strong liquidity and credit profiles.
While these developments indicate stability and improved access to capital, risks like asset quality, regulatory challenges, and cost volatility remain key factors for investors to monitor going forward.